All right, it's going, guys. Tuesday. I just came back from a swim, and afterwards, I have to go and settle some stuff. But anyway, let's cover some news today. All right. So before we begin, I want to talk a little bit about the market. That actually what we saw yesterday, which is how the market basically kind of flip flop a little bit. However, this morning, well, for us in the morning. We received news that Russia is doing a little bit of partial pullback on the troops, which of course is giving a lot of console to the rest of the market because even the stocks futures are performing a lot better. Of course, if we don't have such a bad situation on our hand, the market will definitely be flourishing a lot better. So, of course, the stocks are up, the cryptos are up. I'm sure commodities might be down a little bit due to the pullback from the Russia side of things. But let's just see how it actually will manifest. Over here, the headlines actually say Russia says some troops pulling back from Ukraine border, but exercises continues. So, of course, what we are actually concerned of is also what I actually said in my prior video, where I actually shared the crash catalyst that I actually do see in the near future, which would be how Russia intend to do some sort of an invasion into Ukraine. And what I'm afraid of is that because if Russia basically wanting to respect China's current Olympic season, they will just want to kind of back off a little bit. And after the Olympic is over, Russia is free to do whatever they want again because China will not kind of be on their tail about do not take the limelight away from our once in a decade kind of event in the country. So yeah, I can see why that would be the case. So of course, I'm not going to be super duper bullish about this either. Like I said before, I don't think there is very obvious indicators for us to really get off on right now. Even though Russia are pulling back some troops from the Ukraine border, I don't think that this is a surefire thing for us to see that we're definitely past the entire situation. Of course, I also shared two other indicators that I see as a potential crash catalyst. One, of course, I'll be explaining later on. The other one, which is the emergency Fed closed meeting. Of course, we're not going to be getting anything about that until the 16th of March, where Jerome Powell actually comes out to address the entire press conference, and then we might get a little bit of a little content of what actually has been explained. Of course, I think tomorrow, we should be getting the minutes for the January FOMC meeting. So I think that's going to be quite interesting for us to actually go through what was properly spoken about during the whole FOMC meeting that transpired in January. So I think that would be a core leading indicator for us to see what actually happens in the economy. All right, so same thing. Okay, I'm not gonna be too political about all these things because, like I said before, this entire thing is like walking around this entire huge political eggshell, and I don't really want to be politically left or politically right. So I'm just gonna be talking about it very very lightly. All right, so pullback of around 10,000 troops out of the force, estimated to have numbered about 130,000, came amid a new round of shuttle diplomacy aimed at diffusing the crisis. So this was about this, where the West steps up diplomatic efforts to avert Russian attack on Ukraine. This was actually uploaded yesterday instead of today, where they were just basically talking about how they're actually going to go around this more diplomatically as compared to what they usually do, which is have troops all prepared for war kind of thing. So yeah, Russia amassed more than 130,000 troops and an array of military hardware at border with Ukraine in other territories surrounding the country, including Belarus. The Kremlin has repeatedly denied it has any intention of invading Ukraine. Of course, like I said, this is a political battle, so I think that we can only take whatever they say at face value. But anyway, that's beside the point. All you guys need to kind of know about this is just that as of now, Russia has put back a partial, have partially put back some of their troops from the borders, which is kind of like easing off the tensions that we have been having for the past few weeks. And that's considerably good. But of course, my own caution would be, just be a little bit more cautious about your investment, because this might just be a fake rally again. Of course, the market is booming right now, and I'm happy out for it, without a doubt. Snapchat is up, Robinhood is up, SoFi is up, Google is up, Apple is up. All these good names that I do have, they're all up, and I'm very, very happy for. But same thing, do be cautious about this sort of fake rally per se. Okay, anyway, next up, Elon Musk giving $5.7 billion of Tesla shares to charity last year, which was also the year that he had the most amount of sales in Tesla shares. And yeah, I mean, I think what Elon Musk basically did here, I think this was done anonymously, right? Was it? Yeah, okay. The filing doesn't name recipients for the 5 million shares of Tesla shares that Mr. Musk reported donating over the course of more than a week in November. He didn't respond to a request for a comment. So I think this is actually, this puts Elon Musk in a better light. I think this helps with his social image as well, especially when a lot of people were kind of like calling him out for selling a lot of his shares, even though they were just kind of like exercising his options to buy in and then quickly sell out on those options. Of course, people like Chamath, people like Michael Burry, of them were calling Elon Musk out and say that, why are you selling out of your own company? Do you see something in front that none of us retail investors or even institutional investors do not see? And that's kind of the worry that a lot of people were having. But, I think this, giving 5 million Tesla shares to the charity, I think is, of course, going to put a better light on Elon Musk. Of course, there will also be those political leftists, such as your Elizabeth Warren, going to be coming out and say, there's only 5 million shares. You could easily have done 12 million shares, or you could have easily done 18 million shares. And I don't know. Every single time I see these kind of comments, especially with like Amazon, where Jeff Bezos gives out, I don't know, like $300 million to this charity, or when Bill Gates gives out like $400 million to this charity. This kind of news usually get picked up by Forbes and all those more socially influential journalism platforms. But usually when they are all out there, people kind of just bombard in the comment section and be like, Elon Musk have like Elon Musk is so rich he can give way more. Why did he only give like 3% of his net worth, or why did he only give like 10% of his net worth? He can do more. It's always he can do more. And I think a lot of people just downplay the fact that this is still a lot of money nevertheless, and you should be happy that the less fortunate or people who are in need are the ones that are getting it. And ultimately, I think that this kind of helps to a certain extent. Of course, those people who are rich, they can kind of have their own race to go to space. Of course, that's kind of like the ongoing meme about all the richest people kind of having their own space race. But yeah, nevertheless, these people are also the ones that are also contributing the most to the tax bracket, the highest tax bracket. They're giving the most to the taxes, of course, and they are also the ones who are constantly doing this sort of charity, be it from a good will intent or ill intent. Whatever the case, they're still donating it to charity, and I do not really want to call out for good behavior. It's kind of like, punishing good behavior. I do not know why would you do that, but yeah, I think that this is a good thing for Elon Musk. But yeah, I'm just saying, there's going to be a lot of people who are going to bitch about this and say, how Elon Musk should have given more. I'm sure Elizabeth Warren is going to come out at some point and say, oh yeah, Elon Musk, after earning like $5 billion, or like after earning like $30 billion and only giving $5 billion, really? How is that called charitable? That kind of thing. I don't know. But yeah, okay. Who sold $16 billion of Tesla share in the past 2 months, past 2 months of 2021. And then he was compensated in stock awards, and doesn't accept a cash salary from the EV maker. Converted roughly $22.9 million and 22.9 million vested stock options into shares last year. So such activity likely triggered a hefty 2021 tax bill that charitable giving could help offset. Okay, so yeah, basically this is gonna be talked about a lot. Of course, giving to charity would help to offset with taxes. Definitely, I understand. But let's not forget, you are basically still giving out money to charity to offset your taxes. Either way, he's still giving money to charity. And I think people kind of like miss the point completely, even though it is to help himself on the journey or in the process of helping himself offset the taxes, he is still going to lose the money, and he just much rather give the money to the charity, which I see no issue with. But of course, there's going to be a lot of leftists, extreme leftists, are going to come out and say, "Oh man, like if you wanted to, you have just done it. You've done it anonymously. Okay, you shouldn't have reported it to the SEC. Okay, you should just donated your entire life, your entire net worth, and not tell the SEC. That's what you should be doing. That kind of thing." And I kind of go against that sort of mindset, I guess. Donation of appreciated stock are particularly attractive for wealthy people. The foregone capital gains untaxed. The value of the stock is a charitable deduction subject to limits, and the stock comes out of the person taxable estate. So for people who are unaware of what this basically means, so usually right now what happens is that because if he's going to get taxed on it for a however much shares he's getting on, you have to actually take into consideration the profit that he's going to get. And because he's exercising most of his stock options, he's going to be exercising most of his stock options at a very, very low price, because he were given stocks options as compensation, because he don't get a cash salary. And when he get all these stocks compensation in terms of options, right now he's going to be exercising those stock options. Those options might be calls at $4, $5, $6, or even $10. Very, very low prices as compared to what Tesla is right now, which is about $900. So when you actually give it the stock itself away, you are basically going to be charged based on the amount that the stocks are being donated away. That's the amount that you're going to be getting a deductible on. Whereas where you're actually going through the whole capital gains tax manner, where you just get the IRS taking a cut of it, they basically will not count based on that, and they will just count it based on the amount of capital gains, however much you're going to be counting according to the tax bracket in the country, that sort of thing. So yeah, it would make a lot more sense for you to do like charity. But nevertheless, like I said before, I think people are going to bitch and moan about it. Charity is still charity, okay? I cannot like talk about this enough. Yeah, but yeah, okay, that's basically just him talking about that. Okay, Manchin pushes Democrats to revisit tax rate increases. Okay, honestly speaking, at this rate, Joe Manchin might as well be a Republican, even though he's a Democrat, according to this. I'm almost certain. But yeah, Senator Joe Manchin goal is for raising tax rates. Clashes with Kristen Sinema, opposition of doing so. So basically what happened here is because Republicans usually are the ones that do not want a tax rate increase, because when you increase the tax rate, usually for the right side of mindset, they think that when you increase the tax, businesses, the stock market, the economy is not going to do as well, because people are getting more money, they're getting sucked up from them and putting into the whole tax industry instead. Whereas for the Democrats, they think that it's better for you to increase the amount of tax, because of course, the argument point is that, in the 5-6 years where the tax rates weren't increased, the economy wasn't doing particularly well either. And of course, that's a valid argument. But of course, we also have to take into consideration there's also a lot of things that actually transpired in the past 5 to 6 years. And of course, right now, we have to actually talk about how these tax rates are all going to be doing some sort of increment, when Biden actually explained about during his Build Back Better plan, and of course, during his hard and soft infrastructure plan. So these are all already sort of preempt to all the investors, all the citizens of the country, that you guys are going to be getting a tax rate hike. Of course, they're going to be giving some sort of stimulus, such as your child credits and such. Those are, of course, slightly going to cushion the fall, but ultimately they still want the higher bracket of people, aka those people who are earning 400,000 a year and above, to pay a lot more for the tax. Of course, things that in theory that sounds great, and because if you actually put it into proper terms, those people who are rich are the ones who actually know how to make use of those money to actually bring more flourishing to the economy. And I think that it would actually it actually makes more sense to actually have a more standard tax rate. Of course, people would argue that having a standard tax rate would be very, very unfair, because for people from the lower income family, they will not be able to really pay the taxes and still be able to have a proper way of living. And I totally understand. But I think that for them to have such a staggering change in the tax rate from the lower bracket and the upper bracket, I think that just doesn't really make sense. But of course, this whole thing is going to be talked about, and which is why I mentioned kind of pushes the Democrats to kind of want to, let's go back and talk about the tax rate increases a little bit. So yeah, okay. Over here, they are basically talking about how Biden actually explained the economic agenda ahead of this year's midterms election, and honestly speaking, I feel that okay, why can't we just get a good solid tax plan that works? That's the first thing to do. Okay, that's true. And let's be honest, okay, we're having the elections next year, and this is definitely going to be something that's going to be out there. And I think what Biden is intending to do is to use this. Oh, we will tax the rich. Okay, that's what AOC would love to talk about as well. Oh, we're gonna tax the rich. Taxing the rich. That's how you're gonna earn more money as an economy, as a country. And yes, I get that. But the thing is that you are gonna be there. Biden's basically trying to gain the vote of the people who are from the lower income family, and he kind of put a very nice line on it. So anyone that's earning anything less than 400,000 a year, chances are you are going to be voting for Biden. And people who are earning anywhere more than 400,000 and above, they are going to be voting for the GOPs, aka the Republicans, and that's why Biden right now, his electoral efforts would most likely have to be towards going to the people who are of the higher earning bracket. And of course, this would means that they will have to bring more businesses to the country. They have to bring more to the economy. Hopefully, this way, he would be able to get the votes from all this the higher tax bracket people, even though he's going to be implementing a higher tax rate hike. So yeah, I think that's going to be Biden's situation in the next election cycle. Pointed to raising corporate tax rate to 25% from 21%, raising the top capital gains rate to 28% from 23.8%, increasing taxes on the private equity managers' carried interest income. This policy has included a new surtax of household earnings of at least $10 million annually and a 15% minimum tax on large corporation financial statement income. All right, so just to give you guys my thinking about that. Right now, I think Biden's view on corporation tax is correct. I totally agree on that. I think corporations should definitely be paying taxes as well. But I think that the people of those corporations should not pay as much of a tax, because right now, for the large corporations, I understand that large corporations, a lot of them can easily say that they are into this business currently and they're not earning money. They could be lost leaders. They could just have a lot of cash burns, and they are just basically going on this whole PE evaluation of like, oh yeah, because my company is going to be working in 2029 or 2034 or whatever the year might be. And when they use such valuation, you can only use the PE model to actually properly value the company. And when you actually do something like that, the issue is that, because if a company is still losing money, how can you tax a company that's losing money? Okay, and that's going to be tough. And right now, if they actually do some sort of a way to kind of still tax those companies, even if they're not profitable, I think that will work to a certain extent. But I think that they definitely have to do a workaround for the corporation tax. I do believe that Biden is onto something where the corporations are not really paying the taxes, such as like your Amazon and such. I do not trust him. I do trust him to a certain extent. I think that big corporations are not paying a lot of taxes. Especially for Amazon, they can simply just say that they are a loss leader, and they can just show the revenue that they're actually losing money to on some aspect, and because of that, they are unable to pay taxes on some of them. And I think that's very, very possible for them to actually do so. And because of that, I think that it would be better for them to actually implement some sort of tax requirement for this sort of bigger corporation. Of course, if you are really a public company, there should be some sort of a legal binding tax law on it. But of course, Similarly, I am not a CP, I'm not a CFA, I'm not anyone who knows about the industry, so I don't know how the tax would actually go around doing it. I'm just someone who's not even an American, so I don't even know why I'm talking too much about this. By the way, yeah, okay. I respect her and what her concern may be, but I think basically our financial situation is getting worse, not better. So maybe we can take another look at it. Mr. Mention said, I would hope so. Okay, Kristen Sinema said that she would consider proposal that increase U.S. competitiveness and create jobs. Yeah, okay. I think Kristen Sinema has been talking about that for quite some time, and okay, I think Kristen Sinema is a Republican, but she basically acts as a Democrat, and then Joe Manchin is basically a Democrat that's acting like a Republican. It's kind of like this weird as kind of balance in the White House, I guess. Biden says Build Back Better will likely be broken up. Okay, I think I read something along this line. I think it was last week or so. So some Democrats have signaled that they are willing to meet Mr. Manchin's demand on what a government program to fund in the bill, even if it means foregoing other ambitions like expanding the child tax credit. So this was what I was talking about earlier. So that's the part of the stimulus where they're actually giving out $1,600 all the way to $1,800 per child per year. And Mr. Manchin has recently said he supports tax incentives for reducing carbon emission and a program reducing the price of some prescription drugs, while lawmakers and aides also believe that funding for universal pre-kindergarten and healthcare subsidies could be part of an eventual compromise. So I think this is more towards the side of the Build Back Better, where they're actually talking more towards the whole EV side of things. They also want to go down on the medical healthcare and the dental healthcare, which is also according to what Bernie Sanders actually brought up during a rally as well. So yeah, having tax increases exceed spending in the package, so the legislation overall reduces the deficit, and it's also a way for Democrats hope. It's also a way Democrats hope to win Mr. Manchin's support. Many tax proposals in the House bill, such as money from tougher internal, okay, this is the IRS enforcement, and higher tax on U.S. companies' foreign income, haven't spurred much dissent among Democrats. Okay. Yeah, okay, they're probably going to talk about the debt as well. Has argued against adding to the national debt, which recently exceeded $30 trillion for the first time. And he similarly said that he doesn't want to pass legislation that could exacerbate inflation, which is running at a 4-decade high. All right, so for people who are unaware, for the national debt, for the US debt, it passed $30 trillion not long ago, for the first time ever. And I think that this has been an issue for quite some time. And this was actually a huge issue, I think, about 5-6 months ago. And Janet Yellen basically kept on kicking the can down the road. We just keep on saying, okay, we'll just talk about this in the future. Let's talk about this in the future. We have the pandemic to worry. We have the inflation to worry. We have so many things to think about. And because of that, they don't want to. They do not want to go head to head with this national debt situation, and this debt ceiling can basically default on the entire country. Okay, if the entire country can default on this debt, America bonds might actually drop to double Bs and such. And of course, these are all risks that the country have to really worry about. And a lot of time, this sort of news are kind of baked into the economy as it is, which is why you can see a lot of price fluctuation in the past few weeks. Okay, I won't say past few weeks, past few months. You can see that there's a lot of sideways trading, even going downwards a little bit. Of course, these are kind of the risks that people are starting to really price in the market right now, especially with this sort of debt limit passing $30 trillion for the first time. So yeah, this definitely going to be something that's going to be very, very concerning. And of course, Joe Manchin actually has also talked about how the only reason why he wouldn't allow for Joe Biden's bill for the $3.75 trillion infrastructure package, he wasn't going to okay it, because the moment he saw there's going to be $3 trillion, he immediately say, nah, I'm not signing anything below 1.5, if I'm not mistaken. And I think Biden was able to go down all the way to about 1.6. And even then, we met up with new trouble, of course, with the ever increasing inflation and also the debt ceiling that's also looming right above us. I think this kind of just sends shivers down the spine of a lot of Congress. And of course, Joe Manchin probably argued the fact that we probably couldn't do a $1.6 trillion for the entire infrastructure bill. Maybe you can look at somewhere in the ballpark of $1.2 trillion or so. But of course, right now, the entire infrastructure plan is quite in mist. We don't know what's going on either. Joe Biden isn't really giving us a lot of ideas on what's actually happening. I haven't really been catching up on any of the press conference because I don't think there's a lot of press conference on Joe Biden talking about the Build Back Better plan either. So yeah, I think that's going to be a lot of question marks on that part of things. But okay, meeting Mr. Manchin goals on raising taxes could be more difficult for Democrats than cutting some spending, even though he's proposing tax increases far smaller than what Biden campaign on Ms. Cinemas repeatedly told donors and lobbyists that she was opposed to raising the top corporate rate, income and capital gains rates, as well as higher taxes on carried interest at events last year, according to people from their remarks. It's going to be 2 or 3 electoral cycles until you can take another run at the corporate tax rate. Like I said before, I think it's not going to be easy for them. I think I explained this before. This was, I would like to say about last year, about June or so. I think a little bit later last year. I think it was about August, September-ish. I explained about this before. I don't think Biden would be able to do much about the tax as much as he can talk about it, and people can kind of worry about it. People can have a lot of price momentum that's moving the market about it. But chances are Biden might not be able to change it in just one cycle. So if Biden were to get a second term, maybe. But truth be told, I'm not very, very optimistic on Biden getting a second term personally. And of course, on my own personal political view, I do not want Biden to run a second term. So if he do run a second term, kudos to him. But if he were to run a second term, then I think that he might be able to get a crack on the corporate tax rate. But other than that, I highly doubt so. But yeah, okay. I think that's all. That's about it for the politics side of things. So boring. All right. Bullish Bitcoin chart may point to move towards $53,000. Okay, I think this is from the TA that I saw as well. But I wasn't looking at 53,000. I think I was looking at like 51,000 or so. But yes, I think according to the TA, there is a good possibility for crypto to actually jump up all the way to like 51,000 or so. And I did explain it before. I am buying call options and also shares in companies like your Hard 8 Mining and Marathon Digital, because they are basically the companies who are going to be moving with the prices of Bitcoin. And I think that when Bitcoin dropped kind of drastically down to the 40,000 mark, I think that it was a good time for me to actually get behind the companies who are actually behind mining the Bitcoin, trading the Bitcoin, and whatsoever. So yeah, I think those are probably going to be doing well. And I, of course, like Hard 8 Mining, my call contracts on my Hard 8 is currently up, I think, about 190%. I'm going to be holding on to them for a little bit more. If Bitcoin actually eventually hit $46,000-$47,000, there is a good chance that I'll actually go and properly get in on the profits for those options contract. But I'll see how it goes. But I think this is just a news about the TA that a lot of people are actually looking at. So yeah, this study suggests that a target of about $53,000 would come into play for the token, which is up 3% on Tuesday. It breaks the neckline of the reverse head and shoulders at about $44,600, which right now we are at $44,300 as of this recording right now. So of course we are not sure what will actually happen. But okay, Ukraine. Okay, this is actually old news, so forget about it. Okay, yeah, and finally, I think this is okay. I won't say this is the most important one. I think this is also something that's quite interesting. Fed's Bullard said central bank's credibility is on the line and needs to front load rate hikes. So basically, yesterday, what happened on CNBC is Bullard actually came on CNBC talking about the entire raising of interest rates and how the Federal Reserve needs to quickly get the interest rates up. And of course, I do get that. Actually, you know what? I will be making a video about this on Wednesday, which is tomorrow. I'm going to make a video about this separately because I think this is more important in the short term, especially. We would be, especially from now all the way to the 16th of March, I think this would be a huge talking topic about this entire thing. So yeah, I think I'll talk more about it in that video. But anyway, yeah, basically just wanting to front load the interest rate hike. And yeah, I do think we need to front load more of our planned removal of accommodation than we would have we would have previously. So basically, in this line, what he's trying to say is that, oh, okay, there is a possibility that we will want to stop the taper immediately because technically we still have another month of taper to go. But right now, what he's saying here could be that what was actually talked about or discussed about on Monday, aka yesterday, in the emergency closed door Fed's meeting, was to immediately stop the taper. It could be, and because of this line alone, the markets kind of crashed yesterday the moment Bullard talked about this. And yeah, we've been surprised to the upside on inflation. This is a lot of inflation. Our credibility is on the line here, and we do have to react to the data. However, I do think that we can do it in a way that's organized and not disruptive to markets, which, of course, right now, the markets really do not want to listen to this kind of thing. We know that it's going to be disruptive to the market, especially when Bullard comes out to say that he wants to hit 100 basis points by July. That's going to be disruptive to the market no matter how much you try to sugarcoat it. It's going to be destroying the market a lot. And of course, afterwards, when Bullard left CNBC, and then people kind of just started to recover in the market, which I was actually quite shocked about, because I wasn't really expecting the market to kind of recover that quickly after seeing such a report from Bullard. Especially when we were going to be getting the meeting minutes tomorrow, and also on the 16th, which is the FOMC for February. But yeah, basically that's kind of what was happening yesterday in the news. But anyway, that's all I have for today. It's a little bit of a longer news today, but I thank you guys for watching, and I'll see you.